Hi and welcome to Swissquote's Daily Market Talk. It's Friday, September 27th. The S&P 500 printed its 42nd record for the year. China announced more stimulus measures to boost growth in China and bring investors back to its shattered financial markets. And while Saudi Arabia has just dropped its goal of supporting oil prices and is now focusing on gaining market share. Ouch. So we continue to count, guys. 42. The S&P 500 printed its 42nd record high this year yesterday on the back of a mixed bag of economic and corporate news. First, the latest GDP data from the US confirmed that the US economy grew 3% in the second quarter and the price pressures fell. Then corporate profits improved double of what analysts expected. They rose 3.5% in the second quarter versus a 1.7% gain penciled in by analysts and up from a negative 2% the quarter before. And wait, because I'm not done just yet. The initial jobless claims in the US came in lower than expected yesterday, and the continuing claims fell as well, defying the worries of an alarmingly softening jobs market in the US. And if you put the strong data in the context of Fed that has just started cutting its interest rates by 50 basis points, a move that's typically associated with crisis, panic, or severe economic meltdown, we are not done being surprised just yet. Because the US economy will probably land softly, but on a mountain at the end of the day. And it will obviously be great if and only if all these good news and strong data doesn't boost inflation again. My only hope is the US jobs market, didn't collapse when the Federal Reserve started hiking the interest rates aggressively. So maybe, but just maybe, inflation won't surge when it brings them down by big chunks. Who knows? And it will be time to go back to the university and start a doctorate on why do things happen the way they do. Now, due today, the Fed's favorite gauge of inflation, which is the core PCE index, is expected to remain unchanged at 0.2% on a monthly basis and print a small uptick from 2.6 to 2.7% on a yearly basis. Additionally, the personal income in the US may have risen faster, but personal spending a bit slower than the previous months. Those are the expectations. So a set of data in line with the market expectations will certainly keep the soft landing vibes in play and secure a 43rd record high for the S&P 500 before this week's closing bell. But a stronger than expected PCE read, God forbid, could eventually bring the idea that the Federal Reserve and the dovish Fed expectations may have gone just a bit ahead of themselves and call for some correction, at least a minor one. Because look, yesterday's robust GDP read from the US brought the probability of a 50 basis point cut from the Fed at the November meeting slightly below the 50% level, but the chances are still very near a coin toss. Yet the economic data tells another story, obviously. But anyway, that's the economic data leg of the story for today. Now there is the corporate leg as well, where Micron Technology jumped 15% at yesterday's trading session, in line with the post-earnings move that we saw in the after-hours trading. So strong forecast due to robust AI demand was the major responsible of the move that we saw at yesterday's trading session. Then VanEck Semiconductor ETF also gained almost 3% yesterday. On the other hand, Supermicro Computer plunged 12%, and that was on separate news that the DOJ is probing the company. And that's following Hindenburg's report about malpractice in his books, remember, a couple of weeks ago. But that's such a small story to care in the middle of big stories of the week. So the other big story of this week is, China, where things finally go according to the plan, because there were more stimulus news on the wire yesterday. So this time from the fiscal leg. And in this context, China said that it's looking to inject 1 trillion yuan into major state banks to boost consumption in China by issuing special sovereign bonds. So this explosive cocktail of monetary and fiscal stimulus measures was what investors were demanding since years from China, and the satisfaction is quite clear, at least in the short run. The CSI 300 index gained more than 15% since the beginning of this week, and the index pulled out the May to date negative trending channel's top, and also the almost 2-year bearish downtrend top to catapult itself into a greatly overbought market territory, and that's just before the beginning of a national holiday in China next week. Then likewise, Nasdaq's Golden Dragon China index is up by 20% since this week began, and the index broke above its own 2-year downtrending channel top. So buyers were so crowded in Shanghai indeed that Shanghai Stock Exchange encountered problems to follow up with the orders. So could this euphoria last is the million yuan question. Well, I was discussing just this week with NFG partners Glenn Coxon, about the fourth quarter market outlook that will be published on our YouTube channel in the coming days. And well, his opinion about the whole Chinese thing was very clear. He said that this is not an investment, but this is a trade, and that this enthusiasm that we see today will rapidly fade if the economic data doesn't follow. Now, note that we hadn't heard the news of fiscal stimulus measures when we were talking this week, which could eventually improve that view a little bit, but the long-term investors won't clap before the data brings good news from China. And today, all we have in hand is that the Chinese industrial profits grew 0.5% year to date in August, and that's meaningfully down from 3.6% printed just a month earlier. Now, speaking of big stories, another big story of the moment is oil and the news that Saudi Arabia will drop its $100 per barrel price target and start increasing output in December to gain market share. Ouch. So this was a possibility that we were exploring, I think, 1.5-2 years ago, when Saudi Arabia decided to shoulder a good amount of the production cuts by itself. And well, it's happening today. So if Saudi Arabia is not playing the production restriction game anymore, it will be very hard for the rest of OPEC to hold on to a price supportive strategy. So in concrete terms, this means that if Saudi Arabia starts pumping, well, others must follow as well to increase their revenues in line with Saudi Arabia. And that's bearish for oil prices, mind you, especially given that the non-OPEC countries are also pumping abundantly right now. So voila, US crude is down to $68 per barrel level this morning, and the short-term outlook remains strongly negative. And here in Europe, well, the Swiss National Bank cut its interest rates by 25 basis points yesterday. As expected, the dollar franc barely reacted to the news because it was all priced in, but the SMI index closed yesterday's trading session near the highest level since the beginning of this month. And beyond the little Swiss borders, the STOXX 600 index flirted with all-time high levels yesterday as the rate cut expectations in the developed world, combined with the Chinese stimulus measures this week, boosted appetite for Europe's China and growth-sensitive stocks. I mean, Louis Vuitton jumped 10% yesterday, as if the Chinese government had decided to pump directly money into Louis Vuitton and not into its own economy. But anyway, well, the early CPI reads for France and for Spain for September are due to be released just this morning. The figures are expected to point at a further easing in price pressures in the Eurozone. So if that's the case, we could see a solid resistance near the 112 level in the Eurodollar before this weekly closing bell, but the US dollar and the US PCE reports will eventually say the last word for this week. So this is all for this week. I'm İpek Özkardeşkaya, and thank you for joining me, and thank you for all your beautiful and supportive comments. I hope this episode of Market Talk has been helpful and it has been insightful to you. So please do not hesitate to leave your comments, your reactions, and your questions below as usual. Follow us on Instagram, on X, and on LinkedIn for regular market updates. Subscribe to our YouTube channel for daily market comments. And please don't forget to hit the like button on these videos to let us know that you enjoy them. So I will meet you again next week. And until then, good day trading and have a lovely weekend.